Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome again to the channel, the Greedy Trader channel, of course. For those of you who are new to the channel, this is where we talk about all things market profile. If you don't know yet what of course market profile is, then I'm going to go with the assumption that you're of course not a professional trader. Again, it may well be that you've had some trading experience going over some years, but you're probably not a professional trader, and that is totally okay. For those of you who've been following me for a while, then this is just another video. So here is where we talk about all things market profile, and I show you how professionals view the market and how we use the profile to make decisions. Again, before I dive deep into this video, I want to kind of talk a lot about what are the things that market profile teaches us, right? Because sometimes when you see something new and it looks very, very strange and you've never seen it before, the first premise is you want to think to yourself, well, what the hell is this? Right? I've seen it all. Well, the truth of the matter is that most people come into trading via influencers, right? And all of you know what I feel about influencers. As you can see, most of my videos are very low key. I've been expanding them of late to help traders understand that most of you are being tricked. You're being tricked into believing that there is a specific way to approach the market, and someone has this one special recipe, and that's what you need to be following. And one of the things that you need to understand about markets in general is that there are a lot of sell-side participants, right? By that I mean there are a lot of people who are paid to trick you, right? They're paid good money, and it just depends on what kind of individual you are. If you're a certain kind of person, you will take that money. There are many people taking that money, and they're going to send you down a rabbit hole that you're unlikely to recover from. So look at it this way. I'm sure some of you have had that experience. I think this is not unusual for most traders who started their trading career in the retail arena, where they had to learn from scratch. I think most people did, even people in the primary side. I think what tends to happen is when people get a little bit disillusioned with the retail side, they tend to go onto the primary side because they want to make the same kind of money you'd make as a broker, or the same kind of money you'd make as a market maker, right? So again, most people, and that's the vast majority of people in the business, are never going to be anywhere near a bank. They're never even going to see the inside of it. A lot of people will come from hedge funds and private equity spaces because the guardrails to get in there are a little bit lower. So you are going to find a lot of individuals who are willing to trick you in order to make a buck. That's just how it is, and that's the first thing you got to understand. And that means that you're going to have a lot of trust fund babies as well who are going to see this as an easy mark, right? Now, if you think about it logically, you know, maybe you got $1 million in your trust fund. Well, what easier way to go than to become a trader, quote unquote, and band that money about? You might have even some good months, right? You know, you got $1 million about, who knows, you might even make 200 grand that year, right? So the reality of it is that you're going to find a lot of people who are going to be showing you something to achieve that you cannot possibly achieve. Vast majority of people come into trading because they want to make some money for themselves. In some cases, they want to improve their lives. So you tend to find a specific kind of demographic or a group of people who are going to be gravitate a lot more to trading, right? And then of course you're going to get people who, they got their 401ks in the case of the United States, or in the UK they got their pensions, and they're willing to invest that either to reap dividends or just to stay in a stock and get the capital gain. And this demographic are not traders. These guys are just like everybody else. They're just investing in the markets, and they're hoping over maybe a 10-20 year span, depending on how young they are, they're going to make some money. Now we all know that's not why anyone gets into trading, is to put money in the S&P and watch it grow for 20 years, because again, by the time you discover this, a lot of people are sometimes sort of that point in their life where they're having a family, they're buying a home or something like that, so they're not going to be in that same position where they're going to be able to just put money in the S&P 500 when food still needs to go on the table, and they're looking at trading as a good way to do that because they've seen all the commercials and all the adverts, right? Usually by influencing type traders. So I absolutely despise influencing type traders, right? What people want to see, at least what I believe most of you guys want to see, is someone who is actively trading and struggling through it with really good concepts and ideas that are going to help everyone. And that's kind of a lot of what I do here on this channel. And one of the tools we use to do that, because again, I believe in tools, right? If you don't have the right tools, just forget about it. And I think there are a lot of people who are not using the right tools. I mean, it's really easy to flip up in a candlestick chart. They're all over the place, every platform, and it's not a bad way to visualize the market. I mean, if you're a macro analyst, I do a lot of macro work, and it's easier to do on a candlestick chart, to be fair. But how many people are going to be macro based traders? Not really. Most people are going to be day traders. They're going to be at best swing traders across sort of realistically 3 to 7 day hold times, right? So these are very short-term kind of positioning, and it does require that you build a specific skill set, right? And part of the repertoire that you need to build that skill set is going to be something like market profile. Now, don't take it from me. I mean, 95% of funds or people who were educated in that space or run any kind of fund are gravitating to market profile, right? It's not common. You don't hear about it everywhere. Influencers don't know about it because they weren't really actively in the business, right? They're influencers, so they've basically taken a playbook from someone else, and they're now you're obviously selling it. That's the name of their game, right? And some of them are doing very well and getting very rich doing that, and that's okay because it's a business model. I always say to people that if you're not willing to monetize your knowledge at some point, then you're not really a businessman. I mean, reality is that even trading might be a struggle for you, to be fair. So there, of course, there has to be an element of wanting to monetize your knowledge, but you want to be able to monetize that knowledge in the sense that you want to give out the correct knowledge, right? You want to be able to say, well, look, I've spent years, I've been accumulating these tools, and this is how they work, and this is what I see the big money doing, right? And this makes a lot more sense for newer traders, so they don't have to go down a rabbit hole, right? So they have to be conscious that, well, coming into the business, I'm going to need a few tools. I'm going to need to sort of know how to use those tools, and that's going to take time. In some cases, it might even cost money, right? So I'm not averse to, say, people trying to monetize their knowledge. It's just when you send a young trader down a rabbit hole, that's not great, because that person is also trying to sort of develop and build something for themselves. So I'm totally against that. So I think if people are aware that there's going to be a cost to entry, that you can't just DIY everything, then they become conscious that, well, this is a game they're going to have to invest some time in, right? So it takes away the gamification element, which I think a lot of the excitement is based on gamification, right? So platforms are gamified, everything's gamified. So people coming into it have a gamified mentality. It's like, well, it's like picking up a PlayStation or an Xbox. So I just need to grab this game, I'm going to learn how it works, and then sooner or later I'm going to be beating everybody online, and in the case of trading, I'm going to get rich. But the reality is that there are a lot more, there's incredibly smart people in this business who are also trying to do what you're doing, and they probably have better tools to do it. You've got to bear that in mind. And also, I always say to traders that the market moves when people fuck up, right? So if traders fuck up en masse, you get a big volatility expansion, the market moves, and everyone who's on the right side of that makes money. So the question everyone wants to know is how do I get on the right side of traders screwing up? And that's the reason why we have tools like Market Profile to help us see that. So there are a couple of things that I learned from Market Profile that I think most institutional traders would agree, or people who've at least been in the space and have some understanding of it. And even if you haven't, if you've come across Market Profile before, then you know what I'm talking about. Again, a couple of the things that I learned is that Market Profile helps you a great deal with positioning. Now, one of the things that every trader will agree they struggled with in their early trading is that they couldn't really position properly. So they didn't know where to get out of a trade, they didn't know where to get in. Worse, they didn't know where to put their stop losses or risk parameters depending on, you know, the kind of size you're trading, right? So this was all levels of confusion, and they've researched, they've gone to forums, they've gone everywhere to find this information, and everyone just keeps telling them the same thing, right? So it's like this echo chamber of, oh yeah, you just have to, you know, you just have to be good at risk management. There's all these little dogwood type scenarios, and they don't really help because they're not really saying how do you position your risk. There's no why questions like, okay, why is my stop loss down there? Oh, some people say, well, put your stop loss there because it's a recent low and there's going to be stops down there, and all kinds of stuff that's just basically unverifiable. Either way, it sounds logical, so people go with it. Well, one of the things that Market Profile helps you with is to be able to see bids and offers clearly, so you can actually see where potential liquidity is and where things are going to get pretty heated, right? And you also know that that's usually a safe place for your stop if you're kind of, you know, trying to have that below a certain type of area. So that graphical visual representation that Market Profile gives you of price action helps you to kind of see in real time visually as well, to experience that, okay, I think I know where I want to allocate my risk. And that does so many wonders. One, it allows you to position size correctly. So if you're going into a market that's looking hot, that traders are probably going to get squeezed, then you're probably going to think, well, maybe I should position size, maybe I should put more on there because that looks like a valuable play. So if it looks a bit suspect that the level might not hold, then you might look at, well, I'm going to position size, I'm going to, you know, adjust my risk better and, you know, readjust the amount of capital I allocate because this is a little bit more of a riskier trade. Now, you can't make these deductions if you don't have a clue where any of this is going to go, right? You just can't make that deduction if you don't have a good vision or a good visual. So positioning for me has been key, and this is transformational to, you know, asset allocation across the board. Now, the other thing that this has done is help traders understand volatility. Now, what do I mean by that? Now, assets they're volatile in different ways, right? So you're going to find that if you're trading cable, for example, currencies, it's going to be there's not a lot of volatility. Say versus say something like, for example, sterling yen, right? Incredibly volatile, right? Bounces everywhere, huge volatility, and again, Profile helps you understand that over a longer period of time. So, you know, you can break a profile into 52-week segments, and then you can see essentially where the market's most volatile, or periods where it's been highly volatile, how many times it's been highly volatile. So you can start to break down some statistical benchmarks, especially maybe you are a coder and you want to code a system or a particular type of strategy that might be volatility based, for example. This will help you if you're an options trader, for example. You'll have a good sense of what the IV is, even for stocks that the IVs can be a little bit more unpredictable, in my opinion anyway. So again, you have a good vision of volatility, which is crucial if you're going to also allocate risk. I mean, how can you allocate risk to an asset when you don't know its average volatility over time? it's going to make it incredibly difficult for you. So let's take, for example, Bitcoin. Looking at Bitcoin now, we can see those points where volatility expands, what that looks like, and we can have some real good historical data of what volatility expansion really looks like and how often it happens, and that helps us with the allocation. Now, there are a couple of things you can easily glean from Bitcoin is that in times when we don't have an aggressive Bitcoin market, we have incredibly low volatility. So whilst you could potentially intraday trade this, because volatility is a little bit lower on the intraday, so it doesn't expose you to as much risk, for example. But again, you're going to get days where you're going to get big pops. So in an asset like this, my immediate conclusion is that it wastes a lot of time to day trade it. You'd want to allocate to this over a longer term cycle, because for 80% of its cycle, it is low volatility, and the profile easily shows you that. That actually this asset is restricted in volatility, so something is going to happen sooner than later. And then you can easily make a deduction of key levels, when it pops, what that will look like, and how you'd want to allocate that against that, and where your targets are going to be based on historical volatility. There were so many people in crypto towards the end of the bull market that thought that we were going to get massive volatility in Bitcoin, when it became obvious that volatility had really tightened up as we sort of ran into about sort of 65k. And really, you should be, if you're a money manager, you would have been an active seller at about 60k, in my opinion, and that would have been leaving it late. I believe most people were sellers roughly about sort of 55k, with some trimming at 50. Right, so there was an expectation that we could go to maybe 70, 80, 100k, but again, when you look at the volatility plane, there wasn't a lot there to indicate that. So that's the other thing you get here is volatility. You want to understand this, and that's good. Now, the other side of it is perspective, right? And this is the big one, right? Is that most people, when they're trading an asset, they lose perspective because they can't see the longer time frame. So let's take, for example, gold. I have a weekly profile on this, weekly profile segmented, and it's several weeks of activity for gold, right? So I think I've got about 60 weeks of a frame of gold in terms of volatility, everything we just discussed, right? I can see this very accurately. So I start to form perspective, right? I can see where bids are, I can see where the key levels are going to be, and that allows me to allocate my supports and understand at what point are we likely to see gold rebounding, or there's a certain degree of undervaluing going on, and also how far can that go. So I have a broad perspective, so that allows me, one, if I chose to intraday trade gold, for example, I could do against a longer time frame. That is the key, is that I can operate with that and take advantage of volatility expansion. So for example, I can split my rotations, which gives me immediately access to the smaller time frame. Now, if I'm trying to get into a position, I can position against the longer time frame, which is weekly segmentation. So I'm actually really far out on time frame. It allows me to allocate risk properly, and then I can envision volatility expansion, right? Because now I can say, well, I can see maybe there's a massive accumulation of bids. I can see where the prior offers were, and I can visualize that, okay, volatility is likely to expand this week more than normal, and it's going to be able to trade up to a specific level, and then I can position against that, and that gives me a good perspective for my targets. Because then once it hits that level, I can start to get out of my trades, and then I know that, okay, we might not get further volatility expansion, we're going to be a bit more restricted. Right now, because most traders don't have that kind of view, sadly they're going to position at the top, because they can only react to the volatility expansion. So when the volatility expands, they see the move and then they allocate against it, as opposed to be able to say, well, what is the potential volatility, or what's the implied volatility of this asset at this point in time, and I'm going to take my trade and position against that. Now, and what's weird is that most traders are trading volatility. If you're a day trader, that's what you do. You trade volatility. If you're a swing trader, that's exactly what you do. When you start becoming a position trader, now we're talking about you being a directional trader. But most people are not directional. They trade volatility, which means that if you're trading volatility, how can you not know about volatility? Well, I didn't want this whole video to be a lecture, but it turned out to be, because I think it's an important aspect to learn, and that is why we do what we do. Now, I run a free Discord server, so the link is in the description below, so check it out. And you can see how I visualize the market. And of course, I'm multi-asset, right? So I play at different tables. I do equities, I sell premium, I trade futures via CFDs, of course. For me, it's just more efficient. I live in Europe. I also have access to a range of markets that I can explore. But again, it's just about I go where I think capital is going to move and where, in my opinion, traders are squeezed, and that's where I want to operate from. So I don't need to get siloed. Now, of course, I have assets I prefer because I like their volatility plane. I think it's really good, and it kind of, some assets, if you do your journaling and your numbers, you can see the assets that you do well with, or at least the assets that are having a lot of volatility expansion at a given time. So you kind of rotate based on whatever a specific asset or sector is doing at specific times. Anyway, I'm not going to draw this video out any longer. I hope you enjoyed it. I hope this puts some perspective on why we use market profile and why we think you should too. But to my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?